This morning, investment bank UBS say that they've done an assessment of loans held by the big four retail banks and other lenders, in particular in the domestic property market. They say there's as many as $500 billion worth of what they've called liar loans, which represent as much as 30% of the Australian housing market, and they say that it poses a threat to the Australian economy. Fiona Guthrie is CEO of Financial Counselling Australia and deals with these issues every day through financial counsellors. Fiona, good morning to you.
Good morning, John.
If there was 30% of liar loans, we'd expect to see a significant number of defaults on mortgages. Are we seeing that at the moment?
We're seeing significant numbers or increasing numbers of defaults in some parts of Australia, but particularly WA and parts of Queensland where the resources boom has finished and people are losing their jobs. But no, we're not seeing a significant number of defaults at the moment.
UBS say that the regulators' attempts to force the banks to higher prudential standards, more careful lending practices, have by and large failed. What are you seeing from your end of the equation?
Well, we're certainly seeing people in mortgage stress, and we know we've got a problem with household debt. So that's the first point to make. I don't know that it's the Armageddon that it's painted in the headlines exactly. And so there's a couple of points to make about it. I think it's quite hard for people when they're filling in mortgage applications. We know people are not very good at estimating their expenditure. If you've never filled in one of those forms, and you suddenly think, well, I have $100,000 in the bank, I can't be spending that much money.
Yeah.
And it's important to note that the obligation is actually on the lender and the broker to verify someone's financial position, and they have access to people's bank statements. They've got a legal obligation to make sure they lend responsibly. So if there's underestimation of expenditure, then it should be something that banks and brokers are picking up. And we know in particular that brokers are not doing that. So ASIC looked at broker loans a year or so ago, and they said if you went to a broker, all other factors the same, you'd end up with a higher loan, and in some cases people seem to be underestimating expenditure. So I think the onus is back on the industry to some extent to make sure these things are accurate.
They maintain massive databases on people, though. I recently applied for an increase in a credit limit on a credit card from $10,000 to $20,000. It just seemed, not that I've ever racked up that much, but it seemed like a simple and easy thing to do. I had to fill in a fairly complicated form, Fiona, but quite frankly, I could have put anything down and they didn't check any of it that I'm aware of. They looked me up on their computer and went, oh yeah, you seem to have been in good standing with us for a number of years and we'll just take what you say at face value.
Yeah, we think there are some problems with the way the banks do benchmarking of expenses. So what they would have done behind the scenes is they would have run some sort of algorithms around what you put in as your estimated expenditure on various categories, and they would have checked whether that seemed about right or not. So it wouldn't have been completely without verification.
So where do the alarm bells get triggered from?
The alarm bells for these headlines?
Well, no, if someone does go into the bank and fills in a form and just goes, yeah, well, that's my financial position, at what point does the bank start to say, well, actually, we need to check and verify what you're telling us?
Well, they would do a credit report check, and they also would look back at somebody's, I would assume, back at the information they have on record about your spending and savings patterns. So they know a lot about you already in the banking industry. So they would have done that. They would have done that sort of behind the scenes check on you, John, and you would have provided your consent for them to check your credit report.
Oh yeah, they looked me up on their computer and they wouldn't let me see what was there about me, which was a bit irritating because I'm a nosy Parker. I wanted to see what they had about me on file and they wouldn't let me see it.
Yeah, the system is not particularly consumer friendly. To try and get access to your information held by credit reporting bureaus is really expensive if you want to get it quickly, and you don't get access to the full information if you ask for a free report.
Yes. Nathan in Beaumaris has texted in, and one of several people, Fiona, but he's expressed it well, saying, I've lied on my mortgage applications, and when my lies weren't good enough, my mortgage broker made my lies better. That's how you get into the property market. Everyone does it, claims Nathan.
Well, it's not a good thing to do, Nathan, because if mortgage interest rates do go up, you might find yourself struggling to repay. You can sort of understand it at the same time, though. House prices have increased, so people are doing whatever they can to get the great Australian dream of owning a property. The only thing that we might hope will save people like Nathan, who might find themselves in mortgage stress, is that the banks do build in a buffer when you borrow money for a mortgage.
The buffer being, we assume that the interest rates will be going up at some point.
Yeah,
will you be able to meet these obligations if they go up to 7% instead of 4.5% or whatever?
Yeah, that's right. And we know that some people won't. We do know that there are significant numbers of households who are pretty close to the line, who are experiencing some degree of mortgage stress, and it may very well have been they had been too optimistic about how much they would save and how much they would spend, because life gets in the way.
Oh, yeah, and people are always optimistic about how things will be in the future. Oh, look, we're going through a tight patch now, but things are going to pick up, and you assume nothing's going to go wrong. You know, the car's not going to blow up and the kids aren't going to need their teeth fixed or whatever, and in fact, all of those things do happen.
Yeah, of course they do. So one of the things we would like to see the banks doing as a standard in their income and expenditure statements, and you wouldn't have seen this because they don't do it, is to have a standard line for savings. We don't have a savings culture in Australia. We're not encouraging savings, and one way to do that is just to make it the norm, that you would have a default, that you would save something like 10% of your income every pay period if you possibly can. But we don't do that, and we don't encourage it.
Quite separately, though, car loans are another huge area of concern, and in the United States and North America and Europe, across lots of other countries, and here some sellers are offering 0% interest over 3 or even 5 years from time to time in order to get people just to move cars through. And then, of course, they pick up on service and maintenance and selling you rubber mats and accessories. That's where they make their money, as long as they can get you to buy a car. So do people also exaggerate their capacity when they do car loans?
Oh, any sort of loan, that will happen to some extent. Again, it goes back to the lender is supposed to verify someone's expenditure. And the other thing that we see with car loans is people paying higher rates because they don't shop around and they accept the rate that they get from the car dealer, and they can sometimes do better by looking elsewhere. But they're put under a fair bit of pressure in car yards to take what's on offer. Oh,
totally, and to help you get a loan, and sometimes at fairly, there are hidden traps further down the trap just to get you to sign. They'll say anything. Fiona, thank you indeed. Lots more text messages, calls as well. Fiona Guthrie there, CEO of Financial Counselling Australia. Banks ignore credit reports. They kept giving my brother loans even though notice of correction on the credit card report said not to, says Tina from Lilydale. Where do the banks stand when they continually offer increased credit card limits, asked Bernadette. And what you fill in on your form is only relevant if you default, says Matt from Arthur's Seat. Then they can check up your claims, putting the repayment horse before the default carriage.